Welcome back to the channel, everyone. In today's video I'm going to be talking about a very important topic across all of Forex trading, not just SMC, which is market structure. I know it's not exclusive to SMC, it's not a smart money concept, but it is a fundamental part of Forex trading or indice trading, gold, crypto, whatever you want to trade. You need to understand market structure. Because that way you can make sure you're trading with the trend, or if you're trading against the trend, you know where to target for your profit. This video is going to be the first part of kind of a little two-part series. The next video is going to be on top-down analysis, so I wanted to make sure everyone understands market structure and how to look at it before we get into the next video in a few days on top-down analysis. So if you're looking forward to that, make sure to turn on your notifications and you'll get an alert when it comes out. But just before we get into the video, if you are new or if you haven't subscribed yet, please do subscribe. It really helps out the channel, and like this video if you do enjoy or learn anything. And also, if you are new, then please do make sure to check out some of my other videos if you want to learn a bit more about SMC and how to create a strategy around a concept that you like. But let's get into it. Okay, so I'll start with the basic fundamentals of market structure and then introduce something that's a bit more complex. So for a bullish trend, you have a starting point and price, you're looking for something like this. These kind of points here, the top points, are going to be your higher highs, and these troughs, the lower points, are going to be your higher lows. So I'll just mark all of that out. I kind of touched upon this in a previous video on order flow, but this is more just technical analysis, looking at how the price action. But what you've got here in the trend, in an uptrend, is you've got your high low, high low, high low, and you want to have a series of these show a healthy uptrend. If you're constantly having high lows broken and high highs not broken, then you're probably in a range or a turning point. The kind of theory behind why this shows an uptrend, because the high lows are not getting broken, which means if price ever comes back down, buyers are willing to step in because they'll take any discount they can get to push price higher. And the higher highs are getting broken, which shows that there's not a lot of selling orders being placed at this level. Because you might have thought the reason that the price pushed down here was because lots of sell orders came in, which is somewhat true, but the sell orders were just people taking profit from their long orders down here, same at this point, and it's not actually a key level where there's lots of institutional sell orders coming in if it's getting broken. So then similarly for a downtrend, you have price making some structure like this. You will just have to look at the markets and train your eye to kind of identify it, but I'll go through a few examples on all different time frames, because obviously the markets are fractal. If you don't know what that means, basically you can trade any time frame and you wouldn't be able to know what time frame you're trading on effectively, because they all look similar, and what happens on the higher time frames also happens on the lower time frames. The difference is does the higher time frames kind of have more power over the lower time frames, because the higher time frames are where the actual market is moving. It all depends on what kind of trader you are, if you're a scalper or swing trader. I'll just mark this up now. So instead of a high low, you can have lower lows. I did kind of touch on this again in the breaker structure and change your character video, because obviously when a high high gets broken or a lower low gets broken, that's a breaker structure. But I just want to look at it more from a price action perspective. So it's kind of an overview of market structure. If you want to take a screenshot of that, it's not the most detailed, but it gets the job done, and it's just kind of the fundamental theory behind it. Before you get into chart analysis, where you actually learn what it looks like in real time. So if we just look at Euro USD here on the daily, you can see with a clear downtrend. Obviously the reason you know that is just because up here is higher than down here, and so you can see prices moving down, but that's not really enough to define the downtrend. If you zoomed in, you can say price is going up here. It looks like it's going up, but that doesn't mean it's an uptrend. Obviously on a smaller time frame it could be, but on the daily it's not. And so just looking at the markets isn't enough. You need to actually mark up points. And so what you've got here, start at any point. I'll just start here. You've got your first point, then you've got a lower low, lower high, lower low, lower high, lower low, lower high or equal high, maybe just a bit of liquidity taken, and that's why I'll get into the more complex stuff. But again, lower low, lower high, lower low, lower high, not a lower low. So potential reversal, but then no new, you get a higher high, you get a lower high again, before another lower low, lower high, lower low, and then at the moment it looks like we're making potential another lower high. or we'll break this point, and then market structure could turn bullish, and that's where you get your change of character coming in. And so now you know you're in a bearish trend. You're going to be looking to go short if you're trading this time frame. And again, as I said, the market's a fractal. You can go to the 4 hour, and you can see kind of similar stuff. Obviously, on the higher time frames, there's going to be less noise as well. For example, here you get a trading range on the 4 hour, whereas on the daily, it was just part of a retracement from down here to up there. Lower low down here on the daily, lower high up here on the daily. And that's why when you look at different time frames, you can kind of see, when you're just looking on the 4 hour, you kind of look at the daily trend as well, and daily market structure, which is good. If you just zoom out a bit more, you'll ignore the individual candles and just look at actual market structure. On the lower time frames, you can see the market structure of the higher time frames, if that makes sense. But this is where kind of counter trend trading comes into it. And this is something important. Obviously, if you haven't mastered trading with the trend, then I wouldn't recommend trading against the trend. But if you are going to trade against the trend, you can go a time frame up from the one you want to enter on. Have a look at what price is doing. Look for supply zones if it's in a bearish trend. So here you've got this daily supply zone. Mark that up. Might get respected, might not. But then you go to the time frame you want to trade on. And if you do want to get in on a buy trade, this is where you want to target. That's what I was talking about earlier, using the higher time frames to target if you're trading counter trend. So first of all, you can see market structure. It's bearish. You've got your lower low, lower high, lower low. Then here, bit of consolidation. You just zoom in a bit more, you get market structure here. Got your high, lower low, lower high, lower low, lower high, lower low. I know it's a lot of me saying lower high and lower low, sorry about that. But then here you get a break, and so this is now your lower low. Yeah, higher, high, higher low, high, high, higher low. And so you can kind of get in at any point, maybe somewhere in here, or you're trying to get in at one of the lower lows, maybe on a lower time frame. And it's fine to trade counter trend as long as you're just targeting maybe a higher time frame area that could make it reverse. You don't want to be trading this to kind of take it all the way up here, because that's just trading against the trend. I mean, if you move your stop loss to break even, you can, but for me personally, I prefer just to trade with the trend, as you can catch a lot of larger moves. And the reason you know that is if you go to the higher time frame and look at the market structure, you can see market structure is bearish, and if you catch a sell from somewhere in here, you can expect price to make another lower low, and so the minimum place it's going to go target is down here. This low is going to be broken if it decides to come back down. You can't really know how far down it's going to go. You can predict, maybe place it a bit in there, but more guaranteed to just target the low. And that's where high time frame trend comes into it. I'll talk more about that in the next video on top-down analysis, how you can use that to actually get entries and have a strategy. But yeah, again, you can also go down to the 1 hour, look at structure again. Obviously more noise again, but you can see when there's trend, there's clear pullbacks, then expansion, pullback, expansion, for change of character, and then change it the other way. And this is kind of what the market does. Obviously there's complex stuff and trading ranges and stuff, a structure like this, where it's not really going anywhere. But you can still get entries here. I did get a Euro USD entry from here, targeting up here. And obviously you're going to lose out when the trend does reverse, which is I sent a Euro USD trade to the Discord from here. And obviously if price had carried on, that'd have been a nice trade. Trading with the daily and the 4 hour trend is bearish, but the market decided to reverse a bit. It wanted to go up here to this supply, I guess, or just continue up further. We won't know for sure until we get some confirmation in this zone. Yeah, that's kind of the fundamentals of market structure. You're looking for highs and lows and just see which direction the market's moving in. One more thing just to be cautious of is that obviously, should I go back to the daily? Obviously the market structure isn't always going to look as perfect as this, and you're going to have on lower time frames. I'll just change the color of this. On lower time frames, you get a market structure that just goes all over the place, which is not, sorry. You get a market structure that goes like this. I made an Instagram post about it. It's not going to be perfect, like up and down. You could have complex pullbacks like that before pushing up higher. You could even have that low broken again. It's not going to be the perfect like zigzags that you want to see, but because the lower time frames will have more noise and more just like volatility, I guess. So that's why high time frame trading is what I prefer. You get less trades, but with more high probability of playing out. And it means you have to look at the charts less. And all you really need is a few trades a week, even like 2 trades a week. One of them profitable, one of them not. You still make money, 10% a month on a 100 grand account. That's 10 grand a month, which is very nice. Obviously, that's easier said than done, but that's just kind of the goal for most people, hopefully. And we will get you there, don't you worry. Just keep at it, and in a couple of years, you'll be grateful that you never gave up. If you do have any more questions on market structure, then please just leave a comment or send me a message on Discord. If you've learned something, please do like the video and subscribe to the channel. Thanks.